One of the biggest mistakes that I made, that a lot of people made, especially immigrants or children of immigrants, is that they don't understand how many financial tools are available to them in the United States and beyond. Most of these things are available in pretty much every country on the planet now. And there are some that are very simple financial tools that are very simple and financial methods of investing or general just understanding of finance that if people understood and implemented could make their lives significantly easier. And I think the most basic one that's actually very simple and very easy to do, just requires patience over a long timeline, is dollar cost averaging. Now, if you haven't heard of dollar cost averaging, it's basically you come up with an amount that you can invest on a regular interval, and then you automate it and you set that amount to go from your bank account into an app like M1 or Robinhood or Schwab or any broker that you have, and it gets in, and then you also pick the companies you want to invest in. So if it's $50 every week that you can invest, then you set that on a weekly basis, and maybe you're investing into Google or Apple or um, Altria or whatever, maybe into SPY, anything, whatever you want to invest in, you can invest in it. You can invest into silver or gold. But basically, if you set $50 every Friday, then it'll just come out of your account and it'll get invested into those, into whatever you choose through your broker. Now, this isn't anything new, but it's probably the most simple strategy that most people could use and overlook or aren't aware of, that can significantly change their life in the long run. And the benefit of it is, obviously you don't want to set an amount that's going to put you into financial strain, but you set an amount that you can comfortably invest every single week or every single month or bi-weekly or whatever it is, whatever amount you're comfortable with. But the benefit of it is that you have a bunch of small investments over time instead of a few big ones, so that you're less impacted by drastic changes to the price, because your average will continue to change, and because markets are designed to go up in the long run. um, the longer you invest, the safer you actually are, because your average will consistently stay almost always stay below whatever the price of the asset is, depending on what you invest in. Obviously, there's a little bit of an asterisk there, but if you pick a good, safe investment in the long run, you should be in a pretty good spot. And that's really all there is to it in terms of dollar cost averaging. You set an amount that you can invest, you set a time frame, an interval that you can invest in, and then you just let it do its thing. And so long as you pick a good investment, you should be in a good spot. And obviously, as your income goes up, if you get a better job or if you have some kind of windfall of cash, you can put more money into it, right? Anytime you want, or you can increase the weekly investments. And the reason that I wanted to talk about this is because it's something that I became aware of a while ago, but I didn't start taking advantage of it until a couple of years ago. And it's one of the biggest regrets that I have of the last decade. And there's two big reasons that I think everyone should do this. One is because if a bank account is the worst place to keep your money, because it doesn't do anything in a bank account. And I understand that people have a fear of losing the money in an investment or anything like that, and I understand that. But for the most part, a bank account is the worst place that you could put your money. And the second thing is that you spend what's in your pocket. So some people are very good at not spending their money, even if it is just in a checking or a savings account. But people like me have a hard time letting the money just sit there. And if I have access to the money, I was more likely to spend it. At least that was in the past how I was. Not so much anymore, but it is still something that I struggle with in recent times. So I've learned to just take that entirely out of the equation. So if I know that I'm more likely to spend money that I have access to very close by, then I'm going to. It's better for me to not have that money, not have direct access to that money. Put it somewhere where it's going to take a couple days to get access to it. I can't just transfer it from one, from a savings to a checking and then spend it. So those are two big reasons why um, I think that everybody should dollar cost average, or it's a good idea to look into dollar cost averaging, because it's a simple way that you can grow your money much faster than the interest in a savings account. And if you're like me and you don't deal with interest, then you can't even take advantage of that. Um, and contrary to popular belief, investing you can invest in a way where you minimize your risk. Obviously, there's never going to be anything with no risk, but looking at everything that's happened in the last 10 years or last 5 years, it's clear that just leaving the money in your bank account isn't safe either, because inflation got hit. We got hit with inflation so hard that the money in your bank account might not have changed, but it did become significantly devalued. Whereas if it had been in the stock market or into an asset of some kind, it would have gained value even just against inflation and the drop in the dollar. But if you had 50,000 in a bank account and you didn't touch it over the last 5 or 6 years, that's great. But that 50,000 is worth a lot less now than it was 5 years ago. So to say that a savings account doesn't have any risk would be false. So there's risk with everything. And so with investing in the stock market, you still have to deal with risk, but there's a lot more upside. Whereas with a simple bank account, there might be less risk, but there's also very limited upside. Um, I think most savings accounts don't even pay interest greater than what inflation is nowadays. So the idea that I think is important is to understand the concept that I think is important is everybody wants to be rich, but people think they have to get rich quickly. And the truth is, the secret of the game is that you can actually get rich slowly if you're patient. And this it feels slow in the beginning, but if you look at a 10 to 15 year timeline, which I know sounds like a lot, but getting to my mid 30s, I could tell you that if I can go back to 20 and tell myself, hey, invest put your money in these places, just do these very simple things that you don't have to think about, and by the time you're 30 you won't have to worry about, you might not have to worry about money at all, or you might be in a much more comfortable position, and by the time you're 35 you could be in a spot where you don't have to work anymore. If I could go back and do that, I would do that. And it seems like 10 to 15 years is a long time, but the sooner you get started, the sooner you're going to get there. And for the most part, people don't have the not necessarily don't have the discipline, but a lot of people will not do what's required to make a lot of money in a short amount of time. So if you're not going to do that, then the only other option is for you to do a little bit every single day or every single week over a long period of time. And there is enough that can be done that will make your life significantly easier. So it's important to think about getting rich slowly, or even becoming financially independent slowly, as opposed to trying to get rich really quickly, because that doesn't really happen. And I should have prefaced this video by saying that none of this is financial advice. I'm not trying to. None of this is financial advice. I'm not trying to give any. I can't give any financial advice. So just take all of this as entertainment, and which is important now, because the next thing that I was going to say is if you don't know where to invest, or if you're unsure about the markets, it's very daunting. The thing is that you could just invest in the market itself. You can invest into an ETF like SPY or QQQ. SPY is literally SPY on Robinhood, pretty much every broker. That's what it is. And SPY basically follows the stock market. It follows the S&P 500, and QQQ follows the NASDAQ. So if you invest in those, you're essentially following the market, investing in the market. And if you're unsure if those are good investments or not, you can look at any stock chart all time, or you could look 5 years, 10 years, 20 years, whatever, and you'll see that despite all of the dips that have happened and even the big crashes, it's always gone up. They've both always gone up in the long run. So I think that if most people dollar cost averaged 10 or 15% of their paycheck into the stock market, into big safe ETFs, then their lives would be significantly easier. Um, and if you do it long enough, you can probably, most people in the United States could probably retire by the time they're 40 from a job that they don't like. If you like your job, then, keep at it. But I think most people could get to a point by the time they're 40 that they would have enough to buy a house or put a down payment on a house. They would probably have enough that they could leave a job if they didn't like it comfortably. They could work part-time somewhere and still have all their expenses covered, or have enough money coming in that they'd be fine. Enough money coming in from their investments that they'd be fine. Or any number of, like, there's so many different things that you could do. And there's a lot of confidence that comes from the fact that you would have a lot more money in your bank account, or in your investment account, and you would have a strong portfolio. And over time, you'll learn more about it if you would decide to get into it. But I do think that most people's financial lives and literacy could be greatly improved if they dollar cost average just into, some of the safest ETFs that have been around for a long time. I just gave you two of them. And I think one of the most important things about this is technology's gotten to a point where you could pull the money out anytime you want. Obviously, if you pull it out within 12 months of the investment, you have to pay higher tax on it. But it's not like back in the day where you would have to call the broker and get the money and whatever else. Like if you have a bunch of money in Robinhood invested, you could sell it when the market opens, and 1 or 2 days later it'll settle, and then you can withdraw it and it could be in your bank account almost instantly. So I don't think that has ever been easier. It's never been easier to invest and take control of your financial future in a way where you don't have to do anything over the top or crazy, or like put in 100-hour weeks or work 3 jobs or anything like that. And I think that there's a lot of fear around investing, and there's a lot of different tools and behaviors and habits that can make life significantly easier for a lot of people on the financial side. And I think that's what a lot of people need right now. I know that a lot of folks do need some kind of immediate relief because things have gotten to a point where they've been out of control. But if you think long term, when things start to get better, especially if you're young right now, I think that this is one of the best things that most people can do. And I think it's important not to have a fear of losing your money if you do invest it, and not to have a fear of trying new things. I think that there's a lot of fear mongering online. There's a lot of fear mongering where people like to talk about scary situations and worst case scenarios. But the fact of the matter is that most of the time they're telling part of the story and trying to freak people out. Maybe because they have something to sell, or because some people literally think that if you're making money, then it'll stop them from making money, even though the markets are so big that pretty much every single person could make money over the long run and still be fine. And it wouldn't impact the markets at all. If anything, I think it would expand the markets, and the markets would get bigger faster. So don't be afraid to try something like that. Don't be afraid to try something different. Don't be afraid to explore a little bit. And, obviously you have to be smart about it. Don't put so much money into something that it would hurt you if you lost it. When you go into an investment or go into something new, think, well, how much can I comfortably invest that if I do lose it, I'm going to be fine? And the thing is that most of the time, the vast majority of the time, like 95% of the time, it's very rare for an investment to just go to zero instantly. I think the only place where you can instantly lose your money is a casino, or if you are trying to do derivatives in the stock market, like options or futures or something like that. So don't do that. But if you're investing in stocks, if you're investing in companies, highly, highly unlikely, extremely rare that you buy a stock today at $20 a share and tomorrow it's zero. I don't think that would happen ever. I think it would get halted, and you would have a chance to sell. But the real risk to that can take you to zero is much more likely to happen in a casino than than in the stock market. So anyway, I just wanted to come on and make a quick video about that. I hope this at least piques your interest and you decide to look at it. There's a lot of different apps that you can use nowadays that help quite significantly, that make it quite easy to invest and take your financial future into your hands, take control of your financial future and put it in your hands. Most people have heard about Robinhood. If you're watching this, I'm sure you know what Robinhood is. Robinhood is more of investing and trading, but if you want to go more long term, there are apps designed specifically for investing. I believe Acorns is good for that. M1 is the one that I use. It's a very good app. It's not made for trading. It's made for long term investing, so you don't have to worry about being sucked into trading or anything like that. Uh, I think Autopilot is another one. I don't think Autopilot allows you to invest, but I think it's one that you can use to invest in invest in funds and get ideas for investing with. I think they do a lot of research and they also tell you what the politicians are investing in. So those are the ones I can think of off the top of my head. And then there's always the brokers. And like Charles Schwab, TD Ameritrade, they own. Charles Schwab owns TD Ameritrade now, and you can also invest with your bank. Most national banks will have it. Chase will allow you to invest, and yeah, there's a bunch. So give it a go. And you can literally just go to Google or you can go to GPT or Claude, any AI tool, literally, and just say, hey, I want a dollar cost average. Can you give me top 5 safest investments? And that's literally all you need. And then you just keep investing and you keep doing it for a couple of years, and you can have a pretty significant impact on your life if you keep it going for, I think, at least a year. If you do it for at least a year and it's not a bear market, you'll notice the power of dollar cost averaging and compounding. And if you do 2 years, it'll become very clear. And if you make it to 3 years, you could pretty much be sold on the idea that this is one of the best things anyone can do. I think if you make it to 3 years, you probably will wish that you would put way more money into it and invested way more aggressively. But I can't speak for you. I just, based on what I've seen, I think that most people would feel that way. So anyway, don't be afraid to invest. Do your research. Obviously, this isn't financial advice, so I'm just out here talking, just trying to keep it real. But dollar cost averaging is a good way for most people to make a significant amount of money in the long run in a relatively safe manner. So I hope you do some more research on it, and I hope you try it out. And if you have any questions, I'll be happy to answer what I can. Just drop a comment and tag me in it, and I will do my best to be helpful. All right, later.